All right, see where we stand. We have prints coming in at 253.41. This is my regular chart. The trading reviews are a little slower today than normal.
Are you using Zoom or the voice chat in the trading room to hear us?
Zoom. That way it can be recorded. All right, so let's look at $253.42. Well, 30 was actually where they had more of them. So that's where we saw the flood come in last night. And then we have the late prints. 262.13. So they got us sandwiched in, basically. Got us sandwiched in good. Last 48 hours of trading, we've been pushed in between the two prints, just keeping us right in this level. We're holding the upward trend for the last week here, pretty much all week long. We uptrend. So technically, we've actually pushed back enough for the pullback to start happening. Let's go to a little bit bigger chart here. Our downside. Let's see if I already got this drawn out. So the miner pops up to about 50% off the last wave that we went through. So getting us up to about the 276, 275 is about as far as we probably will wind up going. I mean, we could make it all the way up to here if we continue the tracking, but concern is we've got something really weird going on in the market late yesterday. I mean, we had the weirdness of Thursday with the job reports, and we got literally just zero response off of it, which is abnormal in normal conditions, especially with us being, a crazy amount of differences that was expected. But the numbers are kind of thrown out the window right now with the inspection value because it didn't respond. And they had to go in there, they had to reprogram the algos for us not to get that type of response. They probably just turned it off. And we didn't get any response off the signing of the bill yesterday. And I noticed I was trying to take a trade last night on the SPY after hours. And after I got into the position, I was like, well, this thing's doing absolutely nothing. So I'm just going to go ahead and get out for a scratch. And I sat there for about an hour and a half waiting to get executed on the SPY to get out. It took an hour and a half for ARCA to accept my order. I tried, earlier, when I got in and didn't get instantly filled, I went in there and tried to change it to go to a direct route. The direct routes weren't accepting. And I started switching different routes, and other routes were accepting. So I went ahead and canceled the orders and went ahead and just went to just get me out whichever exchange wants to take me. Finally, ARCA picked me up an hour and a half later. So there's something definitely weird going on in the market because frankly, I've never seen that before. I've never seen the SPY at any time that it is open take take where the routing wasn't going on. The data was working fine. There was no data issues. But that probably explains why we didn't move. Looks like they were okay with letting you get in, but they weren't okay with letting you get out. So we are pulling back slightly. The trend line, I mean, you can argue that we're underneath it, or you could actually look at possibly moving it slightly and say that we're touching it. But either way, we've still got the issue is that we're more or less at the bottoming of the channel, give or take, a few bucks for the trend that we've been on for this last week. The prints that came in back on Wednesday were rivaling the amount of prints that we started coming in back when we had this drop or this pullback over here on that Friday before we had the run up. Then we kept on getting continuation prints. Thursday wound up coming in with pretty close to the same amount. I'd say maybe about 75% of the same amount that we had on Wednesday. And of course, Friday, we had continuation prints, but the amount of prints that came in on Friday was more or less what I call business as usual because it wasn't extraordinarily high. So this looks like we technically have on a technical side, we have enough of a pullback for the drop to happen. We would all prefer it to go up for a little bit, but the thing is we go up, I don't think we're going to go up more than 20 points. It just doesn't have the feel for it, where you can see the over resistance that we had over in this area here. One of the reasons we're probably having a problem right here is we have a ton of whipsawing resistance that we're fighting through here. We literally fought for these levels on the way down. Now we're fighting back on the way up. So we got to basically still be cautious on either direction off of this. This isn't as clear cut as it was over here the other day, where it was just pretty obvious. Just take a long position and be happy, because you didn't see the same type of reaction that we've got going on with the traffic here. So this is more or less, we have to just be very, very cautious at this point. What should happen out of the aspect of more or less is what they're wanting to happen is they're wanting to rally back up, obviously because of what they've done. But we've already had the pullback priced in earlier. So they're more or less they're wanting us to go like this is where they're kind of wanting to try to bring us back up. And then of course history tells us once you get that, you're going to come back down, retest your level, and then you should start rallying back up before you have any type of change. This is more or less is where they're trying to stimulate the market for us to eventually go. Being that this isn't over, I mean, that's more or less speculation. So I look at it as all the technicals are telling us that we should have more downside wave. History tells us we should always get tested. We frankly haven't gone far enough up for a decent retest of the 38. 38 is kind of the line stands still a bullish area for an easy recovery in a short amount of time. And we still have this massive problem in our hands. We have created the Elliott. We're on our third leg down. We're now on our fourth leg right now. So to go with the Elliott theory, we should plummet. And we should head towards the 50% level. Very rarely do you see an Elliott not work, especially in a condition like this, where we have market crashes or we have anything that is long-standing. So this is probably the greater odds of probably what we'll wind up having overall. We're probably going to be testing the 50% level bare minimum. 50% level would be decent. Normally wave 5 is not as big as wave 3, but I mean, you can go back and look at your books that you read and stuff. It's an argument between 5 and 3 being which is the longer one. One is the old way versus the new way because of modern, techniques have changed, but more or less 3 and 5 are always going to be your bigger waves versus wave 1. And of course, wave 2 and wave 4 are just your retracements. After we get our fifth wave, what we should be is expecting is this more or less A, B, C, D, more or less type of pattern before we have a potential move back up or a continuation further down to create a new wave. That's where it becomes, depending on what's happening in the market at that time, it could go either direction. So we have had enough pullback. We're basically touching about 50% retracement. Like I said, I would prefer to see the 61. So I would like to see if we can. If we don't bounce Monday, we're not going to do it. It's the way I look at it. So I'd like to see the bounce Monday up to the 61. I don't believe we're going to make it to the 78. I think that's going to be a little tough to swallow. But the 61, I think, is possible in the cards before we come back down and get touch or get close to the 38. And this is what they're kind of hoping for the rally back up, which would also create more or less with that theory in this area is we get the pattern that we're used to playing on our Hieronymics. And then more or less at this point, we can just start going sideways back and forth. So either way, we can play it. It doesn't matter. We just need to basically pay close to the attention to it. The institution traffic has basically bought us up dramatically. They have bought, compared to what the amount of traffic we had here for the push, the amount of traffic they've had is massive compared to this. But if it's so massive, why aren't we actually popping up? So they could be just playing the game that they did a massive buildup and pushing us up. And then they come back in and sell some, come back and buy some up, sell some, buy some up, sell some, just back and forth is what they could be doing from day to day. We can't guarantee because it has been 3 days of heavy congestion in the dark pool network that we can't assume that this is necessarily the bottom just because we've got a massive buildup over it, because they could be selling just as much as they're buying off of it from day to day in and out and just playing within this channel. The aspect of, because we should usually when you get that type of activity, that shows a major market correction. We did not get that. And that's the thing that concerns me is like, why did we not get that? Because I've never seen that massive amount of traffic come through and then we literally do nothing. And this is a really a very rare, unique event. Let's just say that, because I've sat there and been monitoring these networks enough. I've gone back and looked at the history of the networks, of how they work. Been working since they started basically logging them. And when we get these type of pressure builds up, usually that's the bottom and it corrects. You go back and look at let's go out to like a daily chart and see how we drop back here in 18. We had the same type of buildup back in 18 over here off that Santa Claus rally. And we go back and look at look how we actually functioned, is we basically just came in, bought it up, and then never looked back. Now, this is the only correction wave we've ever had in history off of a major event moving with a death cross and everything else taking place, where we've bounced and never came back to retest. All of the previous areas of concern, the 08 crisis, the 2001, our .com bubble, 87 crash, the 29 crash, they've all come down and retested. This is the only one, and this was more or less, I guess, a micro crash, I guess you could say, concerning, because we had the death cross at the time. Everybody was thinking the bull market was over, and then we just basically just bounced and rallied up, and we had massive amount of traffic coming into the market, just like we have over here for the rally up. Now, we didn't have anything over here that was doom and gloom like we've got right now. The coronavirus or anything of its magnitude wasn't around. We had problems with all the other ones that gave us the correction. And the reason why the correction is expected is because no investor that is a long-term investor is going to get in now and start investing. I mean, it's hopeful thinking to think that some investors are going to come in and say, oh, that was the bottom. We got the bill signed. Oh, it's fine. And there's still people dying in our country and across the world. So most investors are going to wait until they see the double bottom come in before they come in and start loading up. The only people that are playing this right now is the hedge funds, the bank institutions, day traders, maybe a light swing trader that's okay with maybe a 24-hour hold, not anything long term. So we're more or less looking at that. We've got to wait until we get the second pullback before they look at it. Now we pull back and lightly hold and push, you'll start seeing investments start coming in and start pushing the market back up. But they're going to want to see that second wave hold. They want to see that curvature happen. They're going to want to see unusual volume come in. They're going to want to see it actually look like this is the double bottom and not basically a continuation. So with us having the Elliott set up, we should continue down. We are coming up here on the daily with the where's my 200? Do I even have it on this chart? Oh, here it is. The crossing right here, the death cross. This is the 200 and the 50-day that are touching. So as of Monday, with another pull, we'll get the crossing take place, which honestly needs to happen. We had way too much of a move, too much of a problems in our economy for us not to have a death cross. So we've got sign right here that this is negative. Our daily chart, our candle right here is we've got one hell of a undecisive candle for potential reversal. So we got our past, we have our present, and our future candle. If it starts dropping, we've got our correction wave pulling back. And we'll have the continuation of the overall downtrend. And if we look at more or less where we stand on our trend side, we're within parameters for continuation on the downside move off of the channel. So we can actually look at a pullback that could start occurring off of this trend. We haven't necessarily broken full-fledged trend. Now, if you go all the way back to looking at what we've had over here, yes, we have broken a trend for a push-up, and we could get a pullback for a test. But I've got a feeling just by the way everything's looking, it's starting to look like this is just an extension of more downside move because we got the Elliott we've got to deal with too. And like I said, more than so than not, you have Elliott's almost every time because the cool thing about Elliott's is you have waves with inside of waves with inside of waves, which that's just part of the choppiness that we get in the market. You look at more or less where we started the basing right here. We've got basically a push of a wave up. You got to pull back, wave, pull back. So if we look at more or less on the correction wave with inside of itself, we basically have got one. This one's kind of questionable if you could call it that. This could be two, but or we can just look at that. This is definitely one. So we've got 1, 2, 3, 4, potential 5, and then we could have the drop. So with inside of the wave itself, we should get one more push going into Monday. So we've got conflicting more or less technicals on it. So being that we're being held up, and frankly, I believe we are being held up falsely. I think this whole market and this week is running off of artificial means that they may come in with enough buying power to push us up just to show that, oh, look, the package worked before they do the failure. So let's just be very careful off of the direction that we get off of it, because like I said, we've got too many conflicting things happening. But the overall buildup does look like that we will start fading back down once we break that 232, which is back from the 2009 level. That's the 38%. That's whenever it's going to more or less give us the bigger downside move down here to a 50% level, down to around 203, 204, right around this ballpark. This is basically our price target once we start giving up this area here. Once 232 gives it up, that's where we're heading, down to 203, 204, with room down to 172. Overall big picture. So got the compromise. This is probably where we'll have a little bit of a problem, but this is basically where we should look at worst case scenario at this point. All right, guys, if you got questions, start popping them up. I think we've got quite a few that showed up now.
Is there a reasoning why the dark pool print sort of showed up at those two spots? We obviously don't know if it's from the same like firm or not, but is there a reason why they didn't want to sort of crunched in, or is it just sort of like an artificial float like we talked about?
Well, I mean, they get together and they push. They can, you can pretty much tell they're talking to each other with the codes that they use off of the share size count. And so they just all come in at a massive amount around that. You'll get some prints that come in at an average at a certain price, and you'll have some that'll be locked in at a certain price on it. Usually the ones that move the market are locked in, and the ones that move the market the most, the ones they hide the most, is the ones that they transmit from the New York to the London, because you got that 24-hour loophole in the law they can get away with on reporting. So anything that we see that comes in on a report that got transmitted across the pond, we have to assume happened 24 hours ago or less. The stuff that comes in without those codes inside of it, then we have to look at those as being, oh, they probably happened in the last 3 hours or so on average. The transmissions come through. Back on Thursday, we had 18 prints go to London, which is unusual activity. We don't normally have more than an average a day. I'd say on the high side would be about 9 to 10. We had 147 prints come through at that exact same price point, which is unusual activity on the more localized, I guess the sooner, reported within about 3 hours or less on Thursday. So not Thursday, excuse me, Wednesday. So their pressure they built up over here is still holding. And it is still, we're still trading above the level that they brought in the majority of it. So, I mean, it looks like big pressure buildup. They bought, then they came back in, and then they bought some more. And then they came back in and they bought some more. And now we've got a new area that they bought some more. That's what it kind of looks like. Which a lot of times you'll see that the prints will come in. You can see the line where it popped up right up to the level. These are the prints that they're doing. A lot of times they'll have these prints come through here, and then the next day you're starting to trade above that level. So if they go off of what they've done in the past, we should be above this area pushing up Monday. But we had massive amounts come in over here. We had a little bit more unusual activity come in over here. And we had usual activity yesterday, more or less, which is telling me that they're either holding it up or they're slowly trying to sell it off. But if they're going to sell it off, Why would they have massive amounts of data over here for us just to make this small amount of money? The small amount of money is nothing. And this is not more or less a buildup of a sell off to me. This is more. This is usually this type of activity is a buildup for a correction. You know, this is to me is the accumulation of their buildup for the correction, which way they've done it in the past when they have a buildup of a correction, we get a massive release so that they can really benefit off of it. So pushing all the way up here and buying down here makes a lot more sense than them buying here and then turn around and selling right back into their orders. Doesn't make a lot of sense, now does it? Now, I could be completely wrong. These could all be sell orders, and they're just building up, building up, building up for a massive downside move. But either way, the pressure has not been released off of what they're doing. Technicals are telling us we should be going down. The fundamental of the signage is telling us we should go up. The pressure being built up is telling us that we technically should be going up. But we've got everything else telling us that we should go down on the charts. So if you don't pay attention to the whole aspect of the technical analysis side, you're just going off of fundamentals, you're going to probably want to think, oh, the market should rally up off of the signing. If you're looking at technicals only, you're thinking the market should crater. If you're paying attention to the dart pool prints, they're kind of telling us that they're building up pressure for something. And until we start trading above their line, we can't get a guarantee of knowing exactly what they're doing. I mean, the prints yesterday was over here at the 262 level. The new prints came in at 253. Well, normally we get on the buildup of the pressure, we get a low number, and then the next number of their building up becomes a higher number. And we had that Wednesday and Thursday. Each time they came in, we had a lower number all day long, and then when they closed, it became a higher number. Today, or Friday, we had a higher number all day long, which was continuation from Friday, and now we got a lower number. And usually when we get that type of information, that means that's telling us the direction they want to go, which is down. It's just very, very weird that we're getting this amount of pressure built up and no release yet. So right now I'm looking more technical wise, and I'm looking more of basically I'm just going to play what I see on the chart and not get my mind set that this must bounce, because the creeping up of the massive amount of pressure and then they're telling us they're going to trade lower into the close, to me is a telltale sign that we're going to go down, that they want to break this level. They want to break this 240-ish area where they had all the pressure building up from Thursday. That's when they start making a lot of cash, because in order for you to build pressure to change a direction, you have to start basically buying it up, buying it up, buying it up, buying it up, and drop. Or you buy it up and then you pop it immediately. But when you start continuously going up, 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 and you haven't released the pressure yet, it only makes sense that you should be going down off of that. Anyone got anything else?
Yeah, sorry, just another one. I know obviously news plays a large part, and we sort of expected a pop when he signed it, but with the Feds having that unlimited QE and Jerome Powell saying that we're using everything that we can, do you feel that they're sort of, I guess it's similar to my first question, floating it until the curve is sort of flattened in terms of the cases of coronavirus? Or are they really trying to legitimately push the market up to the point where this is sort of the bottom?
I think I think the administration is trying to say, hey, this is going to stimulate the economy back. They may be hopeful thinking that this could work, but the reality of the situation is we're so early on in this virus that I think we're going to have a stimulus number 4 coming. I think that you got to think they're giving everybody a check. Okay, we're basically supposed to be going to work basically day after Easter. Well, at least some places of the country will. Okay, so the stimulus phase 3 is giving enough people to pay for 1 month of being off work. I guess your average person, you could say that in order to be able to at least pay some of their bills to get by. As this extends beyond 30 days of being out of work, they're going to have to be a stimulus number 4. Because they were even talking about doing checks in April and doing another check in May. And there's no talk about the signing of this bill that there's going to be a check in May, which rightfully so. They shouldn't be guaranteeing anybody a check in May until they see how long seriously you're going to be out of work. You know, I mean, the people that are infected in areas that can't go back to work, well, maybe they do need the second or third check. People that can work, you know, pay them for the time that they were off work to get them back, because we can't keep dumping money across the board, you know, without us going into a depression. So we've got to look at it as that I think they're hopeful thinking that, hey, we're at the 38, we got to do something now. They're responding now. They see these technical numbers. They know that. They know what the 38% means. But they're trying to keep it to where we don't fall down to the 61, which is very realistic. Before this is all over, we probably will be down to the 61%. Because I personally don't think this is going to be over by Easter. I think some places that haven't been affected, you know, would possibly qualify if you're out in a rural community area with a few hundred people in your little small town and stuff. I mean, which we have a lot of that across our country. That yeah, fine, you know. But if you're in a major metropolitan area that has millions of people living in it, I don't really think you're going to be necessarily going back to work that soon. So the economy is going to continue falling apart. And all the institutions know that this is going on, you know, and our next level is 50%. 50% is usually not an area that holds in these type of conditions. So I think eventually we'll probably make it to 72 before this is all said and done.
So is Monday the tell all for you whether or not we're going up or down?
It's going to be a huge day, I think, to figure this out. I mean, we got the death cross. We'll get the close of Monday. We should have either the death cross on the daily. We'll either have an actual cross seen instead of it touching, or a rally back up for, say, 20 points or so will create the separation of the 50 and 20 with a small little micro gap that would just be an inevitable of time before they'll start crossing. It'll take it another three days, maybe a week at the most, before we'll see it crossing again, because we have to really, really start rallying up before that cross not to happen. It's just a matter, is the cross going to happen Monday? Because we're touching right now. You notice they're not even talking about it on CNBC. I haven't heard them say one word about the death cross. And I think they're just waiting for it to actually get underneath it, just do the cross itself. And so Monday's going to tell us a lot of where we stand on it. And remember, a lot of times we have Mondays that are lackluster, and Tuesdays is where the real move is. We see that quite often in the market. But I don't like to project, well, this day will do that and the next day will do the next and stuff, because I look at each individual day in the market as a fresh new start of a new trading day, and not to be real biased in the directions off of things unless I see institutions telling me something.
Could you illustrate the death cross for us on the chart?
It's right here. So you're going to basically have you're about touching right now. Let's see if I can zoom in a little more to it. So we're not actually crossing yet. We're basically at the point of almost touching. So if we wind up going bouncing up, then you'll see the separation of this one start curling back up slightly. And you'll see this one kind of because it's a slower one, you'll see it kind of just keep going this way. But if we wind up pulling down, then we'll wind up just actually, this is the 50, the green line, the 50 will push down past the 200. We're literally just one day away from it happening. Because you're literally just inches away from touching. You're just probably 50 cents away from probably crossing it right now. And that's something that institutions look at. That's a measuring tool, you could say. When they see that, that's kind of the confirmation that your bullish market is dead. That's the reason why back in 2018 we had it, and everybody was saying, well, the bull market's over, it's this is the end and all that, and then all of a sudden we got an explosion that happened and pulled us out of it. Not saying we can't get pulled out of this, but there's nothing positive happening in our world right now to pull us out of it. This stimulus package isn't positive to pull us out of it. This stimulus package is designed to keep Americans afloat. That's it. They have to do that, because if they don't, we're going to have depression for sure, and we're going to have lawlessness that's going to start kicking in pretty quick. They have no choice but to do what they did, and they'll probably have to do another one the longer this winds up continuing.
Website?
Yes.
I'm on a cell phone and I cannot see the levels clearly. So when you mentioned 50% and then the 61 and 70, can you speak out what those numbers are, please?
Well, the 38 we've been talking about forever. So the 235 and some change. I mean, depends how you draw it. I would just say 235 flat, because sometimes you can get it down in some lower cents, and some will be a little bit higher cents, but more or less 235 is the 38. Because if you did, it depends if you add pre-market data and after hours data to it or not. It's going to change that cents off a little bit. The 50% we're looking at around 203, 204, 203, right around that area. And when we get down to 61%, we're looking at 171 to 172.
Do you see a scenario where the Fed start to buy stocks, and how might that affect the market?
That's about all the Fed's got left. They've got, this other thing they just talked about, but yes, I could see them coming in and buying stocks just to say the market, but I don't see them doing that until we probably go down lower. And we start breaking 200. You see, they're actually proactive this time, way more so than in the past. The current guy that's in charge, he seems to be trying to always do things sooner instead of later, which is, I guess, positive. He's also the only person that's been in charge of the Fed that actually has been very transparent by having the press conferences like he has. Usually it's just all done behind closed doors. You just hear about it. So I think that he has the ability to pull that out of his hat if he wants to, and it can happen. So I don't think they'll do it until we start crossing the 50% threshold. That could be enough right there alone to keep us from dropping below the 71. We're going to wind up having another bill, and potentially the Fed's coming in to do the stock side. If we start getting down to that dangerous level of the 61, we don't want to get down to the 61, because we break the 61. That's we ain't going to be coming out of this thing for probably a decade, probably at least 5 years, I would say.
Dark, I obviously don't want to compare it to 2008 because I was just in high school and then. But if we ever do reach that point, and it is quote unquote a depression, where and the virus is sort of contained, and everyone's sort of picking up the pieces, do you see the market slowly rallying up as quickly as we've seen the last couple of days, and then flattening and then rallying up, or is it going to be literally a slow grind up to a certain point?
We'll wind up getting in any of the aspects. Let's go back to the 09, because that's really our closest thing to compare. Once we started bottoming, we start coming back up slowly, progressively. It's not going to start taking off until you start breaking above the high level that you were at before it all falls apart, because you're basically just slowly just stair stepping back up. I mean, it is a positive gain upward, but you don't really start taking off because you'll get a grind session when you get close to the top, because everybody's like, well, we're going to be able to break through it, and you'll get that back and forth a lot. Once you break above that level, like we did right here, you can see that's when you really start striding and taking off like a rocket. But you'll basically have the stair stepping, going up and down. You have a lot of grind back and forth. You're going to be fighting this zone right here quite a bit for quite a, 6 months, a year or so before you finally start getting that over it. So yeah, we'll basically, once we start rallying back up, this is what you can kind of expect once we find the bottom, is more or less this type of traffic. Now, if you look at where we were back on our low side back in the day, okay, here we've got the 9/11 event that pulled us down, because we were doing just fine until we had the dot-com bubble, and then we started coming down, and then we had 9/11 that brought us down even more, and then we bounced off of this area. We were not in depression status pretty much with this area here. We were in recession status. In 2009, we were at depression status because we were dipping below the low. We've got a good thing. The thing that we have good about this rally here is that we have got to literally drop down to about this level before we go into depression. We got to get down to breaking the high points of the area. We got to go quite a ways for a depression to kick in. The only thing you can compare this to is if you go to looking at the Dow, because we can't use the SPY because has not been around long enough. We have to go back to looking at the 1920 market crash. Maybe able to get away with a weekly on it. Yeah, it's still got data on the weekly. So we can get over there. Should just type the number and be easier, right? And this is the thing that you got to compare to here. Now, times are different. You got to think back in those days, they were still yelling and screaming on the floor. It wasn't electronic. We didn't have any stimulus bailouts. So if you look at what happened in the Great Depression, we had the market crash, and then we came down and we had a recession that started, bounced, back up in the 30s. We didn't hit basically rock bottom until 1933. Here comes the New Deal. Okay. Well, the New Deal was actually slightly before all that, but more or less, you can see how we broke the lows back in the day. So we had a depression that kicked in, and because of we basically started going with the New Deal, we started rallying back up off of all that. Well, they backed off on paying the unit, and we wind up dipping back more back in those days, and we didn't wind up actually getting pulled out of that status until 1937. That's when we started kind of getting out of that status, and then we had the war that came in, and the war brought us back down off of it. And when the war was over, that's when we started taking off, because everybody was concerned about, are we going to have another depression now that the war machine was over? There was no money that was made basically in the war, because it was all businesses were all making war devices. And then we started taking off. And so the New Deal got us out of the depression, but it had to have government money to continue going through this whole time. And they really didn't lay off of it until after the war. Because once they tried laying off of it over here, they found out it didn't work. It pulled right back against them. So they had to come back and reallocate it from just doing parks and services to creating war machines to go in the war, because they saw that the military was going to have to be built up, because we started seeing what was happening over in Germany. And so we wound up actually taking off after we got back from World War II, because everybody was concerned about World War II, that we were just going to come right back down and go back into a depression status, which we did not, fortunately. Innovations of a lot of things came in through from the war, a lot of technology and stuff started moving into the homes and stuff, the baby booming and everything else. It all kind of helped push the market up. And of course, as technology gets better and bigger and we're doing more global monetary movements, the Dow has just been continuously moving up. You see over here, we were very stagnated back in the 80s, kind of feeling like we're hitting our plateau. And then we had the market crash over here in 87? Where are we at? Doesn't look like much of a market crash, does it, compared to what we got going on today, does it? It's a very short-lived. Here we are. There's our market crash in 87. Came down to the 200 before they bounced. Still not, well, you could say depression stats somewhat. It's kind of breaking here, but technically you would have to break lows in order for you to be that low. So these are just been crashes, and we've been just rallying up ever since. And go over here to the 2000s. This is when things started changing. This was the saving loans issues, and then we had the push up with the internet. This is what this is. This is internet. Internet started coming out in the late 1990s. Started changed our world forever. And then we had the dot-com bubble. Then we had 9/11. Just brought us down till we finally started pulling out of the hole in 03. Nice rally. And then we wind up having the top hits with the greed factor of the housing and everything. And then we get the Great Recession. You see how we broke lows here, and that's why we were almost a depression status. If we hadn't done what we'd done on the bailout here, we would have gone into another depression here. And you see today, where we stand today. The Dow is right around an area of a potential bounce. But we start breaking down below, down to these areas here. we have to start worrying about potential depression kicking in. We start breaking the high over here, then you start thinking depression there. For us to go all the way down to this area would be unprecedented because we have too far of a way to run. We got to be somewhat thinking of these low areas on these pullbacks. I've got to worry about the topping high areas for us to start getting into that. No matter what, we're going to have a problem in this zone as far as trying to bounce and get back to where we were, because nothing's going to be the same. There will be changes. Airline traffic will change. People start getting used to doing these Zoom meetings and stuff. You're going to see conferences probably have less and less face-to-face meetings. It means airlines are going to suffer in the future because people won't get on airplanes to meet face-to-face as much. This is going to change education, how the kids can learn and stuff. They'll be doing a lot more online stuff, especially colleges and stuff. That could affect a lot of the colleges around the country. Some colleges could start closing up because of this. A lot of corporations may start saving money by allowing people to work from home on it. Not have to spend as much money on real estate for the land. So that's going to hurt the real estate market some on that. People going out to dinner. I mean, I know myself, we've probably been going for the last couple of decades out to dinner more than we cook at home. You start getting used to cooking at home all the time. You start going, maybe I'll just go out and eat every now and then and cook at home more, save a lot more money that way. Because you don't realize, if you really think about how much money you spend on going out to eat every night, you can start thinking, if you're just living from paycheck to paycheck, you can start thinking you may be eating your retirement check. So you got to look at the aspect of a lot of things are going to be changing because of this, and the longer it drags out, the more they're going to stand. If we get a quick recovery, things will kind of go back to normal somewhat. Because, if you get a quick recovery like 9/11 was somewhat, the terrible thing that happened in 9/11. But heck, I remember when 9/11 happened, and by December, January, everybody was back to business doing, they wasn't even talking about it on the news hardly. It was almost like nothing happened. And the people in New York were still digging rubble up. And we have a quick recovery. We'll be talking about, the money and stuff like that. But it won't hurt their wallets as much. But if we drag this out for a couple more months, start hurting their wallets a lot more, it's going to start hurting a lot of these businesses that have been, frankly, overcharging. Your $400 blue jean companies are going to go away. Your Starbucks charging $5 for coffee may start suffering and stuff. People start realizing they're paying too much for coffee. So Starbucks probably is not going to go away. They're too popular at this point. But your fine dining restaurants that you go and sit down and pay $25 to $30 a plate may start going away. More people may just start going to more reasonable places to eat and stuff. And so things this will change people's thought pattern. Depression will change the world dramatically. It will change the United States dramatically beyond belief. Recession, people kind of blow it off and bounce off of it and don't think too much. Right now, we're recession status. We're not depression status yet.
Hey, Darkside, can you pull up MES? You just do MES1 apostrophe. It'll pull up the. So one of the things I wanted to point out is, how people say markets, always change. Could you go to the daily on this one? I was listening to a podcast last night as I was mowing my grass, and the guy was saying how the micro is a new thing, and it's great for beginners, because he's like, if you go into the market and you have no risk management and you're a terrible trader, he's like, at most you're going to lose like $50, $40 for a day. And I heard that last night and I was like, how is he getting that? Because there's no way. Well, if you look at the range on all of the candles until we started heading down, I mean, the comparison of the daily range is like insane. I mean, the last 2 weeks, the candles are 4 or 5 times the size of it, how it was historically. And, they got me thinking, I've heard it said so many times how the market is always changing and you have to adapt. And that's one of the things I think we need to heavily keep at the forefront of our minds during this time. Things that used to work 6 months ago may not work again for a year, 2 years. Patterns change, your volatility changes. I mean, obviously the technicals still stand, but there's a lot of things that people are taught in a lot of chat rooms and areas that, if you're stuck on one thing and you're stuck on one pattern and that's been your bread and butter, times like this, like you've got to know, you got to be versatile. You have to know all of your technicals. If you're just a fundamental trader, I mean, fundamentals have kind of been pointless lately. And for anyone on here that's kind of going through that right now, I would highly recommend checking out Darkside's class, because through these uncertain times, like I've been green on, I just started trading the futures and I've been green trading the futures with all of this volatility. Has there been some losses? Absolutely. There's been some times where things have whipped on me, but I didn't just hold and hope. I knew the technicals to see when I should get out, how to manage risk. When I thought, okay, well, this is just a pullback now, it's going to go back up. Here's where I should re-enter if it proves this level. You've got to know your technicals, and you've got to know a plethora of ways on how to handle stocks and not just be stuck on one pattern. So if that resonates with anybody, I would highly recommend checking out Darkside's class and staying plugged in, because we're in total different times and everything can change, and that's what you have to do to stay in the market, is adapt.
I agree. Can you turn on the ATR, Ryan? What got me originally interested in futures was the ATR was around 100. We're pushing 180 right now, 185 daily range. That's incredible.
Yeah, it is.
And for those of you that don't know, that moves in $5. So that would be times 5, right?
Yep.
So, because it moves in every dollar is $5. So if it's 150, you're looking at $750 of range in a day.
Yeah.
That's sick.
Well, I can see where these people are talking 50, because start off with the micro is new. It's less than a year old, and the popularity may have kicked in a little bit when it first fired off. The people that knew about it, I just barely heard about it and didn't pay much attention to it until this market started crashing, because I played the minis is what I played the futures in the past. And the volatility we got now, it'll probably go back to the way it was somewhat, but I think we'll have more volatility inside of the micros even after this settles down somewhat, because there's so many people that are waking up and realizing that this micro exists and it's becoming popular now. I mean, when I first started thinking, when this market started crashing, I was sitting there thinking, well, man, everybody's going to run to the hills and pull their money out of the market, and they're all going to be afraid of wanting to trade because of the uncertainty of the unknown, because the average Joe doesn't understand technical analysis and understand that inside of all of this stuff, everybody sees chaos. There's actual structured order of how everything is working. I mean, you can just stair step this thing down just like you can when you're trading it on the long side. I mean, it's doing exactly what it should be doing and what the market's happening. And you just got to understand how to read it. But now that we've got a interest that people are coming into the market, there's more people coming in the market. It's kind of like Bitcoin brought in a lot of people into the market. This is bringing a lot of people into the market because they're sitting at home doing nothing, and they're thinking, whoa, man, maybe I can make some money in the market. And instead of preserving my capital and thinking about paying bills, let's see if we can make money on the market. And so I've started seeing a lot more people that have been joining us in the chats. I've had people interested in the class and stuff since the market crash than I had last year, just because there's been a lot more interest that have been drawn up because of this, and when you think doom and gloom, people sometimes come out and start thinking positive things about it. I think this probably was a good booster shot for it, as far as getting it out there in popularity, for people to realize with small accounts that they can get in here and play this thing and make some pretty decent cash on it. Because you've got yourself something that you could seriously look at making it, because the leverage inside of futures is astronomical compared to equity. Equity, you've got 3-to-1, 4-to-1 ratio during the day, and overnight it's usually a 2-to-1 on your margins. And when you go into futures, it varies from which item of futures you're trading and stuff. But you get into basically like these indexes and stuff, your futures move from a 20-to-1 versus what you'd have to 2-to-1 on equity, is moving to an 80-to-1 ratio as far as leverage. And so you do have to be careful in this futures, because if you load yourself up inside of it, and you're new and don't understand the technical side of it, one trade could totally blow you out if you go crazy and start adding contracts and contracts and contracts like crazy. But if you are very conservative with what you're trading in your contract size, this is a very great opportunity for someone that has a small account, because the leverage is so much greater than you can get on the equity side on a margin account and stuff. So the opportunities right now to be able to make some serious cash in micro is really wonderful. Things start going back to normal. Yeah, your ATR is going to start slowing down, but I'll be surprised if the ATR goes as low as it was, just because now this is a more popular instrument than it was, because the mini has been really just going crazy since it has started. And the main reason that the micro was invented was because there was a need, because how the micro is playing out now is how the mini basically would play out on a normal circumstances. Well, now the mini is even crazier than this one, because if you go to that scale and look at it, okay, you have the same ATR, right? But now instead of it being $5, you're at $50. That's a hell of a difference in cash and quantity. So it's a big difference in how fast your swings are going to move between the comparison between the two systems and stuff. And of course, you also have to have a greater, more or less, count size in order to play the mini versus the micro. Micro is beautiful because it's really designed for people to start off and start learning how to trade futures. And before this happened, I would say safely. Now that this has happened, this is an opportunity to make a lot of cash. But if you don't understand technical analysis very well, you're just going to be taking crap shots at it, and you're going to wind up probably losing money on it. So you really got to know your technical insight, because the futures is more technically driven than anything else. I mean, you'll get the fundamental of a market analysis, since we're playing more or less the whole market. It's playing the SPYs, the Qs, the Dow, the Russell. We're playing more or less a sediment of the direction of the market. You got to look for market news for potential movements. I mean, big tickers like Apple, Amazon, Microsoft, they'll move it too, because they have a high percentage range inside of the SPY directly. Or like Caterpillar or Boeing can move the Dow around because they have a higher percentage inside of that instrument. But this is a great opportunity, and the beauty of it all is no PDT. So you can have a smaller account and build your account up with this thing in here. But if you don't understand technical analysis inside and out, you are going to have a tough time. You really need to know your technicals.
Hey, Dakshit, um, could you talk about oil? What's going on and what you see in future, near future?
Which one? Boeing?
Oil? No, oil.
Oil.
Yes.
Well, all I've seen, I haven't heard any news this last week exactly where we stand is with the OPEC, but it doesn't look like they're getting anywhere with Russia right now. So, um, this has room to break through 20. They seem to be holding it over 20, but it does have the ability to go lower. We've gone lower in the past. Let's see, where were we? Yeah, you see, we got way back here, you know, we're about down at these levels back in 01. So we still got a little bit of room. So I was thinking $17 sounded about right. So we can slip down below $20 by a few. OPEC can survive all the way down to single digits. The rest of the world can't, but they can. Or the Saudi Arabia can, because they produce some really cheap oil over there. But it's not good for anybody at this means. But even if Russia does some sort of agreement with Saudi and they get everything kind of lined up, I don't expect oil to be going back up dramatically. $30 a barrel, I think, would be doable. But until we get planes back in the air, we get people driving in their cars again, we get the boats that are moving around more, because even the shipments are slowing down. I think crude's going to be suffering because we're probably at an all-time low in usage of crude, probably in, I don't know, maybe 100 years. I mean, when has the world ever came to a complete standstill stop? And because we were at kind of a plateau of how much we're doing, because 100 years ago we didn't have commercial airlines flying around like we have today. I mean, we just we're at a plateau area, at the turn of the century of utilizing these fossil fuels, and now all of a sudden we just turned the pipe off, and we're using a garden hose. So it's gases hasn't been down at these levels in a long time, and now nobody can go anywhere and use it. So I can see an immediate response in the $30 range if they come to an agreement, but I don't think we're going to go above that until we start seeing people get back to work. We start seeing the planes go back in the air.
One other question, Dockside, on the cruise liners. They came back and shorted all of them, and the news was companies that are not incorporated in US will not get a bailout. Do you know anything, or can you shed some light on them?
The only thing I know about the cruise liners is that if they didn't get the bailout because their corporate headquarters isn't stationed here in the US, at least the ones that's been in the media the most. And they do have business in the US, obviously, because they got their docks here and stuff. They do have a ton of employees here that are going to be taking a major hit off of not being part of the stimulus. But I think there will be something for them. They just wasn't part of this package. I think there will be something brought up to help them out some way or another. Trump has directly talked about them that they needed some help. He does know that there's tens of thousands of employees here in the United States alone that are going to be suffering, and not to mention all the small businesses that cater to these companies and stuff. I mean, it's literally going to wipe out some of these towns. It's going to turn it into like what happened to Detroit when the auto companies moved out if they don't get some sort of help. Being that they are not paying the same taxes as, say, somebody that has their corporate headquarters here in the U.S., do they deserve to be bailed out? Well, they were kind of, moving away from us to save money on purpose. So it's a two-edged sword. It's more or less, do you help those employees out or in the small businesses catering to it or not, or do you just let them suffer? So I got a feeling there'll probably be something there. I mean, Carnival is supposedly willing to use one of their boats as a hospital, or at least on standby for it. And so I'm sure they're doing that because they realize that, I scratch your back, you scratch mine type situation. So I'm sure there'll be something there for them. It's just, it's not part of this bill. So I'm not going to speculate when, where, and how on it. It's just have to continue paying attention to the news as it comes out and stuff. I mean, I'm not going to short them. They're already down pretty damn low because of this. And I'm certainly not going to look at long in them until I start seeing some sort of headway on it, because frankly, if a few of them go out of business, it could happen. I think that we're going to start seeing a lot of businesses that we have 2 and 3, especially if we have 3 of the same type of business in the same industry. We'll probably see the week of the 3 perish, and it'll just be 2, or some industries may only be 1. It depends if we get into the depression or not. If we get into depression status, it will definitely probably go down to 1 of each.
So when we started dropping, obviously certain industries were hit harder, and certain companies actually sort of were declining slower and then slow down. Then people got into this conversation of, for example, Uber, well, this is too cheap, or Boeing, this is too cheap. If we do have another leg down, do you see certain stocks? I don't want to say they won't drop, but that some people will be like, okay, come on, it's not even going to drop even further, or is it just going to be everything is going to drop? Because I saw people, sort of wondering why, certain stocks obviously have a better balance sheet, or they're going to get a quote unquote bailout. But if we do drop further down or go into quote unquote a recession, even depression, are there going to be some stocks that, as the rest of the market goes down, that they're just going to say, okay, this is sort of the final hold? Or
Well, the bottom on any stock right now is still unknown. So you look at like Apple, for example, it has taken a hit, obviously, compared to where it was at, but it hasn't plummeted as hard as a lot of these other stocks have. I mean, we got a pretty decent rebound off of it. If Apple didn't have the financial backing that they have with all the money set in their bank account and everything like that, they'd probably be down closer to the 120s, the 150s right now. So they've weathered the storm pretty well considering where they're at, because they've only lost about 100 points or so, where a lot of these stocks have lost 200 points. So the bottom there, everybody's taking a hit off of it across the board, and some will weather it a little better than others. Boeing has already started rallying back up. So Boeing was already addressed that they're going to be part of this. So we saw pretty much the low point right now, Boeing at the 88s. Can Boeing come back down and retest it now that they've been announced? They start pulling back, and they could come back and start retesting the 100. We start getting more pullback. Will they be held up? More than likely, they'll probably hold the 100 at this point, just because we do have the backing of the government with them at this point. They're one of the ones that have been directly pointed out. We can see that we've held that trend line of all these things I've drawn over the past in it. So we're just getting a little bit of a rejection off of it. I mean, you would think that, Boeing's got it's going to get bailed out, we should just keep flying back up, but that's not necessarily the case. I mean, Boeing has bounced up to the top of the trend. Now it can start sleeping back down before it actually does a trend break for any more upside off of it. And it still has the same problems it's had before. Nothing has changed in Boeing other than they're getting money from the government to keep them stable, keep them sovereign. That's about it. We won't let you go out of business, Boeing. Here's some money. But the planes aren't in the air. They still have to get the 737 problem behind them. This is just slowed them down even more. So we're, this summer we were hoping to see those things in the air. It may not be till end of the year or the first of we may be sitting there the first of next year before we start seeing those planes, finally get a approval to be able to be sold and the old ones that back in the air and flying, because they got to get the approval first. And then after they get the approval, they got to go across the whole fleet and modify whatever the approval stated they need to be done. That's got to take time. Now, and they also got to deal with all the lawsuits still. So Boeing has, if we stop dropping today, has a minimum of 2 years before it's going to see its head above water again. And that's coming straight from their corporate office. So Boeing has had its bounce already. It does have room to go a little bit higher off of this positive news, but by no means, guys, is going back where it started from. Not until it gets past the 2 years. So we're going to start seeing Boeing start slowing down in the coming weeks. This is more or less just keeping them solvent.
So, Dakshay,
Yes.
I know you don't give any recommendations, but let's say if I wanted to play puts for this leg down, is it wise to get like 2 weeks out or just go like a month out?
Really? We'll give it away.
Which
I,
ticker?
just in general strategy.
Oh, just a
Fine.
general strategy.
Let's
You're
just
talking about
fine.
options?
Correct.
You should always be looking at 45 days out. I mean, unless you're scalping for a day trade, you're scalping a day trade, then it doesn't really matter because you're not holding it overnight. You're just getting in and getting out. 10-minute move, an hour move. You can do lotto days. You could do same week if you want to because you realize it. But don't turn your day trade into a swing trade. So when you turn your day trade into a swing trade, that's when you have problems. When you have your expiration too close, because where you could have a monetary gain the next 24 hours, your time decay alone could wipe out whatever you could have been making. You've got to be in something it's going to be able to overwhelm the loss you'll take on just the time decay alone. So if you go about 45 days out, the time decay is so minute you don't notice it as much. So you have a better chance of making monetary gain even on small moves.
Hey, Darkside, with it being end of the month, March, can you kind of go over portfolio rebalancing, how that may affect the market?
I'm not really even going to speculate on portfolio rebalancing until we get past this issue, because I think everything is pretty much jacked up with everybody across the board. I mean, because everybody's fundamentals is just thrown out the roof. And I'm honestly not even paying attention to earnings reports that are coming out right now and what they're saying they're doing. I'll start paying a little closer to the earnings reports when earnings season starts up again, because we'll be at least past Trump's deadline to getting some people back to work. We'll be basically about 45 days or so since we kind of locked the country down. We'll have a better perspective. I mean, 2 weeks can do a whole lot. I mean, we're already 2 weeks into this, and everybody's got they're stir crazy because they're sitting at home. But we're looking at another 2 more weeks before he's even talking about allowing people to come back in certain areas. And the realistic thing is 2 weeks from now, that virus may be not hit its plateau yet. It may be still firing up. I mean, look what's happening to Italy. I personally don't think that we're getting all of the information out of China that's their numbers are exactly that. Either they didn't count or they're just flat just not wanting to tell us.
They're talking about having a second wave hitting them right now too.
Yeah, second wave is, I think history has told us that majority of plagues come in 2 to 3 waves. So it's and usually if you go back, and especially if you look at the big one back in 1918, wave 1 was light. Wave 2 and 3 were the ones that brought the death toll count to unbelievable numbers.
I read a story about Chinese social media and how they noticed an incredible number of burial urns that were stacking up at mortuaries, that way more urns than they had reported deaths.
Well, we've got a lot of areas around the world that Italy's got some towns that have where they have unusual amount of people that are passing away in certain communities, but they say that we had 10 people, for example, that had the virus, and they had 78 people die in the town in the last 30 days. And you go back and look at their chart over the last 12 months, then the whole year they didn't have 78 people die in that town. Yet they're only saying only 10 of them had the virus. So I think there's a lot of people that in a lot of countries aren't exactly getting diagnosed, and they're dying, and they're just dying. That possibly were part of it. So I don't think the world will ever really know the true numbers, just like we don't really know the true numbers of the 1819, and we do record crap a lot better today. Ever since World War II, we've been on a real great documentary of documenting everything. I mean, that's one thing the Germans did do very, very well, is they documented everything, which was also their undoing after the war, because we had a lot of evidence to try them with, the ones that did make it through it. But there's a point, that they had so many people that died in the 1918 that they just basically stopped counting. That's why there's just estimates that's out there based upon what happened. At a certain point, they got the numbers, and then they estimate there was a lot more because of the stop of the counting. And we may be able to count here, but even here in the States, as much as we like to hold ourselves to better standards than the rest of the world, because we're Americans, well, who says the doctor diagnosed it exactly right, that cause of death? My own mother was killed, and they didn't diagnose her death properly, and this had nothing to do with this virus, and so I don't trust when it comes to them people diagnosing things at the mortuary or doctors and all that as them being 100% all the time.
Do you see? I don't know if we talk or a lot of people are into it, but I haven't been trading gold, but I've sort of been following it. And the reason why, and I found out later why it was dropping while the stocks were dropping, were that people were taking their money out of their gold investments, I guess, to cover their losses. But now, since we sort of, quote unquote, I don't want to say hit the bottom, but sort of, where do you see gold or even the dollar, and wherever that direction goes, do you think that gives us sort of a direction of where the market's going to go, or is it just not correlated?
Well, normally gold does the opposite effect, but you see how the ETF is so low? The ETFs were actually designed to go to zero. So therefore, it's a little bit tough to actually tell what's going off of. Why is the gold standard so low at this point, off of these things? I mean, here's our current trading of gold, but yet our ETFs are reflecting something different. So we got to be somewhat cautious on investments of gold right now, just because we've got a lot of misinformation of exactly what is actually true going on it. Usually gold is a safe haven and stuff, but this isn't. If you think your country is going to basically, the government is going to go away and there'll be a new government that eventually takes over, people rush to gold. They'll rush to Bitcoin, or they'll rush to something that they feel that doesn't touch that piece of paper that has their president on it, because they know that that paper is going to be worthless if a new government takes over. We're not in a problem with this area of worrying about the government being taken over. This is a global problem across the board. So there's really no safe haven when it comes to, if a government falls apart, this is not saying another government necessarily is going to necessarily take over at this point. It's just more or less that the world's falling apart. So that shiny rock is not much better right now than that piece of paper. So most people are just moving their money to cash, looking for the bottom. Even bonds are not doing exactly as well as you would think that they would either. So to me, I'm seeing it more or less. This looks like the cash is more or less is where the safe haven everybody's is going to, because everybody's expecting a rebound, and they want to invest onto these rebound areas off of it. So I'm not going to be paying attention to necessarily gold and dollar indexes per se for the rebound. I'm just basically just paying attention, because when it comes down to it, guys, the stock market is what pushes our economy and our country around. And without it, we don't have a country. We won't have a country. The market has to stay, because we're capitalisms. We're not communisms. We're not socialisms. We're capitalists. So we have to have the market.
Could you reiterate the levels on Monday that you see if it the SPY breaks to the upside where we're going, and if it breaks to the downside where you anticipate we're going down there?
Well, the key thing for the big drop is going to be the 235 again. But we're basically breaking trend, or you could look at this as possibly the bottoming of the trend. Either way, we're at the bottom of the trend. So the 253.30, if it holds, which is a new print, that's pretty much your new roof, and just take it down. And we start breaking 261.13 on the high side, then you can start looking for a long position to push it up. Now you got the 50 right in the way, so you're going to have that 265.30 area has to be broken through for us to start rallying up to the 270s. So you look at this as a potential basing hold and push, but even if we get a rally, what do we got? We're just uptrending. We're continuing on the same function that we've had, we've been doing all week long. So if we turn this into our basing bottom, even if I'm off on this line, we're basically looking at, pushing up to the 270s and then coming right back down and bouncing around, and eventually probably coming back and retesting. So the prints right now at 253.30 and 262.13, which we're currently trading below the 253.30 right now.
And so when you see us trading below that print, that gives you a theory that we're going to the downside, correct?
What gives me the theory of going to the downside is usually when we go higher, that's like we have for the last 2 days or 3 days. We basically how we had basically a high print that came out, and we had that reporting all day long from the previous day, just coming in all day long. And then at the close, I would expect to have a little bit higher, maybe up to here, showing us we're a little bit higher. And this is what happened. Wednesday we came in with some print, came with a print somewhere around this ballpark because we had the traffic down in this area. You can see the little wicks and the candles coming down to it. And then when we closed with higher prints right around this area. And so the next day we come in and we're trading higher above that level, even though we had a dipping in the middle of the night. We came back and just retested that area, and then we wound up trading higher the next day. And so all day long we're getting this prints coming through, and then we wind up closing with this number up here. And then we come back the next day, pull back, when we run all day long back up to that number. And I would expect the exact same thing. I would expect basically now at the closing that we'd have a higher number. We didn't. We got a lower number this time. The things that make you go, So why did we have low, high, just kept climbing, basically, doing higher highs, higher lows, just stair stepping. Now all of a sudden, now we have a high, and now we have our next day is actually lower than the high for the print that comes through. Why would they come in at the close and give us a report of a lower number and not a higher number if they intentionally intend to take us up higher? Why not just keep the number the same? And they're not reporting from way over here. I mean, because this data that's coming through all day long is all this data over here. So the data that we get over here tomorrow, Monday, pretty much all day, we should see that same number flow through until the close. So therefore, that number coming through is not a positive number because we weren't higher, we're actually lower. So that gives us that more of that downside and break of the trend. So we got to pay attention to this trend line. How if I drew it right or if I'm drawing it wrong, either way, we got to look at it. And then, my trend lines are never the greatest because getting this software to line up exactly right. It's just, let's go with something that's slightly more accurate. Let's get rid of these. We have a low point here. We'll just say this is our other low point. So technically we are breaking out of the trend, unless this is starting a new low point for some reason or another, which does not really look like it. Could be. But what's weird is they're holding us up. They've been holding us up. Like I said, I had a hard time getting out of the damn order last night.
Hey, Darkside.
Yes.
Could it be manipulated that they are holding the market up and not letting it break down?
Yeah, absolutely. I think there's something going on. There's something amiss. Because why did the job numbers not move us either?
Yeah.
There's definitely something not right.
He had I don't know if it was a conference call, but he had a meeting with like certain members of Wall Street, right? Was he meeting bankers or was it just like industrialists? Because seems like after that meeting, the market obviously went up. But like you said, even with the official signing and the job report, the market's never really moved erratically one side or another. Is there, I don't want to say colluding, but maybe there's like another announcement? Like what else could the feds and the government do that they haven't done so far? Like the stimulus bill itself is huge. Would they have to draft another one down the road if we don't continue to see an improvement?
Well, they're going to draft another one down the road if they keep people from working another couple of months. I could see them waiting another 30 days or so, but one check's not going to cut somebody that's been off work for 3 months. It's not going to help businesses that have been closed for 3 months if we get down to if we actually go that far down the road. So yeah, it's just a matter. I think there's going to be a forced stimulus no matter what, because if we even say that say it's all over, they'll probably have to do something to kind of help us out to kickstart the economy anyway better. Because right now I don't look at this as a kickstart of the economy. I look at this as they just basically just threw a band-aid on somebody that's just bleeding to death. So I think there'll be another one when things settle down, and there may be 2 more. There could be another emergency one like this one, and then we get the one that finalizes it. I mean, it's hard to say how long this is going to be kicked down the road. I mean, we're going on 4 months now, probably really 5 months that China's been infected, because they started having people getting sick around Christmas of last year. They shut down the country right before their Chinese New Year holiday, which was about 2-3 weeks after our holiday. So the incubation period, they say, is 2 weeks. You know, some are saying it's a little bit longer than that. So that means that we're probably in stage 1 moving into stage 2 right now of timing. You know, and then like we were talking earlier, as far as more waves coming is something to be concerned about.
Doug said, shouldn't they just take care of the virus first and then take care of the economy afterwards with the stimulants? I mean, here in Europe, there are countries that are totally idiotic. They try to find the cure with the herd survivals. So there are no restrictions, nothing. People can go around doing the daily business like always, like nothing happens. And they're using the herd. Who's going to survive is going to survive. And who's going to die is going to die.
Well, we're a little different here than Europe. We all have guns, and we all are lawlessness people. Not all of us, just kidding, guys. More or less that we're trying to keep some stability to keep people home, and hopefully we don't get to the lawlessness part here. We have a tendency of having problems with riots and people are going to start tearing things up. The longer people are off their job, the more likely the business owners are going to think about, the government. I don't know if the government's going to help me or not, so I think I'm just going to let them call all my employees and tell them don't bother coming back because I'm shutting down. They're trying to stop all that from happening, and not doing anything. We've already seen what happened in 1929 whenever that president did nothing, that we had a decade-long depression. They're trying to stabilize the country enough to just be in a recession and not in a depression. It's the reason why we're doing what we're doing. This is the economic side. It has nothing to do with the biological side of the virus. The biological side of the virus is a completely different battlefront, you may say. So we've got 2 battlefronts. We've got an economical battlefront, and then we've got the biological battlefront. And so they both need to be attacked simultaneously. If we sit down and just wait till it's all over and just pick up the scraps and then start stimulating the economy at that point, and frankly, there won't be anything left of the economy to recover. Not for a good decade plus. They're trying to keep it to the recession status right now.
Right, but still you have a reason and you have an effect. The reason is the virus, and the economical side is just the effect of it.
Right, and things aren't going to go back after the virus is over. Things will not go back to normality. It can't. Yeah. The financials are upside down. I mean, anybody, if you don't pay your mortgage after 60, 90 days, they're going to foreclose on you.
Right.
You don't pay your car payment after about 90 days or so, they're going to come pick it up. Everybody's credit will be in the toilet. They won't be able to go out and get a loan if they want to buy something, which means that there won't be any goods that'll be sold. There are big ticket items, because we live on a credit world, because ever since the 20s, 100 years ago, we started credit, and we've been on it ever since. Nobody pays cash, as far as a normal person in our country. Our average person buys everything on credit. The only people that buy cash are the smart ones that know how to do their finances, that hold on to, what they make and realize what it is. But I mean, paying cash for a car is a lot easier than paying cash for a house. So I'd say probably majority of the country, a good 90% of the country, has got a mortgage that has a house. And even if you're living in a rental, well, somebody's paying that mortgage. Somebody's paying that apartment rent, to pay for that land. And so it's the economic problem has to be addressed. Otherwise, we won't have a government.
Yeah, it's totally different over there. I see.
Hey, Darkside.
Yes.
You still believe we're in the fourth wave of the Elliott, one more leg down to eventually make?
Big picture, yeah. I mean, we got waves inside the waves, but by looking at the chart, don't see anything but I mean, I just see basically wave 4, because we've got the drop, pullback, drop, pullback. There's really no pullback that I would call, because this is a high quality. You got little micro pullbacks, but that's part of the big picture. We always have that in Elliott, and so this is more or less the big picture we got to look at. Why do we think that this is the bottom anyway? Because we haven't even plateaued on our problem here in the country, which is only going to create a bigger economical problem for us. The longer that we stay at home, the longer this problem becomes more and more economical problems. And that's the reason why Trump wants to try to get some people back to some normality in areas that don't, frankly, they're not international towns. And I don't think we're reporting enough, because you can't tell me, out of looking at the charts, that Houston, Texas is an international city. When I looked at it last night, they had like 300 and something infected. And you go and look at Chicago, it's in the thousands. New York, of course, is our hotspot. LA's in the thousands. New Orleans has got more affected down there. Of course, they have the parties and Mardi Gras, and you kind of expect that down there for that. But you can't tell me that Houston has only got 300 cases when you've got 4 million people living in the city limits and about another 4 million living inside of the metro. You got about 8 million people in that whole complex of about a 300-mile radius or 200-mile radius, I would say. Because it'll take you 3 hours to loop the city off of the roadway they got up there now. It's 180-mile circumference now. And so you're going to tell me there's only 350 people in a city that's international, that has every known culture and race living inside the city limits of that town? They're just not testing. The only thing that Houston's got an advantage of over these other towns is that it's got land mass. It's probably the biggest land mass on the planet when it comes to spreading people out. As far as, you're not like New York, where you're all combined, you're all condensed in a massive small area. I mean, you got 13 miles of condensedness, where they've got 180 miles of, that. So, but you can't tell me there's enough going on there. So I don't believe the plateau is even close to hitting yet.
I know they're not testing in Houston. I've got people that are being sent away from not hospitals, but their doctor's offices saying that they're not going to
Sorry, broke up there.
Oh. Oh well.
Oh, say it again. It's important.
No, I was just saying that I know somebody that they have the symptoms of it and they're in my age group. But the doctor, when they talked to their doctor, the doctor said, well, you haven't been in an area where there's enough cases. So they said, go home, quarantine. We don't suggest you being tested. And that's here in Houston.
Yeah, well, the first case down in my area, the guy was in Houston and came back down to our area and started infecting us down here.
Yeah, I mean, right this minute, I think Northwest Houston has, I think we have like the first one in Houston, but I know.
All right, guys, we got anything else?
If this week is another week of, I guess, us sort of playing in that zone of the two dark pool prints or grinding along, would that be seen as a positive sign, or is it just delaying the inevitable that we do need to gap down or go down?
I don't think we're going to continue trading in these prints. I think we will have the pressure is being built up. It's just a matter of what day we're going to get the release. I don't see this going for another week of back and forth, chopping back and forth like this. Now, if we continue upward, we could get another day or two on the upside just to make it look like the stimulus is helping a little bit on it. But the pressure is being built up. It's just it needs to be released one way or another, and back to what you're asking, y'all guys were asking a little earlier about the people that are talking to Trump and stuff. Well, most of those people that were in that office is big money, and they're part of that dark pool. So they know what's going on, and they're playing the market, and then they've been doing this since the beginning. They knew ahead of time what they were going to do, when they were going to drop it. We saw the information back on the 17th. We were calling this out before the market dropped. And we also had, some legislators that knew about it too, and they got out early because they were told. This whole system of this movement, not that it shouldn't be happening, because, yeah, we need to be dropping, but it's a structured order of a drop. And you just got to play along with it. When you look at more or less how we're starting to pan out, we're starting to see that we could be a potential trend line between the top plateau here and the top wicks up in this area. So I don't think we'll stay grinding too much longer. It would be abnormal to just say that. But yeah, because the market, even though a lot of people say there's not a lot of normal stuff going on, there's a lot of normal stuff. The only thing I'd say right now it's abnormal is the conditions in the last 48 hours. That is what I've seen that is abnormal. No algorithm movement with the job numbers, and now they literally are doing absolutely no response off of this bill. That type of movement is abnormal. But we got Janny here, so we can just have him just short the market,
I'm in.
Dark side. So what is your theory behind that? Do you think they had a deal which basically said, look, whatever happens, there's bad news and there's good news. Just don't panic. Don't create a panic. Let's sit it out and take it from there.
I got a feeling there's some comments have probably stated to everybody to put some sort of structured order to up and down moves. because they can't control this. The big panic part's kind of done. Now we start breaking the low again. We may see some more panic happening again. You know, we get the death cross. That's CNBC is going to be on there just talking nothing but nonstop about the death cross, probably Monday or Tuesday when it happens. And that's going to create a little bit more fear. Anybody that's holding on to anything longer is probably going to go ahead and bail out, which will pull the market down even more, because there's some people that are probably still holding on for hope on here. But we're not going to bounce until people see a technical reason and a fundamental reason to get in the market for long-term investment. I think not the job numbers, but the earnings reports that are going to be coming out in the next quarter will help for long-term investors to have an idea where they stand by getting these quarterly reports from these companies that actually want to give us a guidance, to where we can find a way of probably showing some stability. But we're literally 3 weeks away from that firing up, 2 weeks away from the banks coming in. Around the 20th or so, Akola is the one to kind of look at. Akola always starts the season off. The daily, or where we got here.
That's the reason why I think we are going to start selling off, is when they start seeing those reports, how bad it really is.
Could be. That could be bring us down. I mean, to me, you're not going to get any investors coming in until they see reports. And I think the people that run by the seat of their pants are already kind of out of it. I think the long-term investors that are in for the long haul, I think they're still in it, and they're just riding the wave. And they're just looking at doing dip buying opportunities to add to their portfolio and average up. But yeah, we're 18 days from Akola. Netflix has kind of changed also over the years to kind of show us a time frame that they look for earnings. So somewhere between 18 to 24 days is when we're looking at earnings season starting up again. The banks be your first ones to report. So you can go look at like a Citi or Bank BFA, stuff like that. So they're reporting also in 18 days. So, but I don't think they're going to hold us at this level for 18 days. It'd actually be to our advantage just to go ahead and break down and get it down there lower and start coming in with some numbers so investors can make a decision if they want to invest in them. Strong companies will survive and the weak ones will perish. I mean, companies I expect to be going out of business probably first will be Home. This company will go away. GameStop will eventually go away. Bed Bath Beyond will go away. JCPenney's will go away. All those I think are pretty much inevitable.
Michaels.
It was their ticker.
I can't remember. I think it's MIK. Or
yeah, MIK. Yeah, Michaels, yeah. They'll be under it. Macy's is going to have to do a massive restructuring. They'll probably be the only one that may be able to, but if they don't watch what they do, they'll be gone too. They already announced before this started they were shutting down a few hundred stores. So now this is happening. They're probably going to have to do a massive cutback. They really just need to pull their whole business completely out of any areas other than major metropolitan areas that have really well-off people that can afford their product. You know, stay in New York, maybe stay in Houston, LA, Chicago, the big towns that has some wealth inside of it, Dallas, any place that has some really well-off people, but pull out of towns, the smaller communities that just frankly just don't do them any justice. If they restructure like that, they may have a fighting chance. But JCPenney's is in just about every podunk town in the country, and that just shows you that they can't make it. You know, and They're just inevitably going to go out. I mean, they didn't really go down much when you really look at the whole grand scheme of things, but still, I mean, how can you sustain long term? I mean, have they done a reverse split recently? I mean, they're overdue for one. Oh, they just went under. Yeah, they're going to have to do a reverse split to even think about staying alive, because they've been under $1 for a little too long. They're heading that direction, if they even wind up even going that far with it.
Darkside, why do you say Bed and Beyond will also close?
Bed Bath Beyond's been more or less on a terrible down. Their financials have been in the toilet for a few years. They've gotten rid of the CEO, and a lot of boards are gone. They've restructured, brought in a new CEO, but they had a fighting chance before this happened. But now that this has happened, I don't think they're going to be able to recover out of it. So I'll be very, very shocked if they can pull themselves out of it. I mean, they are at a technical area for a potential bounce, but, you know, if I was going to be wanting to invest for the next decade and looking for long-term investments, Bed Bath Beyond would not be in my portfolio. Now their financials are too jacked up. I'd be looking at something that's going to be like technology connected to 5G or something. You know, I'd rather put my money in Tesla than be putting my money in this company. Now, if I'm going to play a day trade and scalp it, you know, for a run, absolutely, Bed Bath Beyond is going to be, you know, a volatile stock enough to be able to play that. Swing trade it maybe for a few days, few weeks, yeah. But I wouldn't stick around and put this in a portfolio for a 10-year run. I don't think they'll be here 10 years from now. Another one to probably kind of keep a close eye on. Their financials have been pretty decent, but they could suffer from this is Best Buy. They've been doing decently enough, but you got to look at what the company in general is structured at. They've lost the media department almost completely because everything's online streaming for video content, and music is online now. So they pretty much have lost that. They've lost the gaming because that's pretty much everybody goes online for that. Their computer department is very weak. It's people don't think of Best Buy for computers anymore. Apple's their stores are making tons more cash in their computer department than Best Buy is making in theirs. Televisions is one of the biggest driving forces that they have. Well, everybody pretty much who wants a big screen TV already owns one. So appliances is another carrier there as a go-to, because there's not a whole lot of appliance companies left. They've all kind of gone to the wayside. So they do have that part, the help. But the thing is you don't see people walking out the door with refrigerators and freezers and washer and dryers every day at that store, at these stores. It's just people go buy them when they need them. So that's not necessarily enough to keep them afloat. And the cell phones, they do flourish on that side because they're kind of carry all the carriers and all the devices and all the stuff. But do you really need Best Buy for that when you go to a carrier to pick up these things?
Home Depot has refrigerators and appliances.
Yeah, Home Depot and Lowe's both sell the refrigerators and appliances. And so I'd rather put my money in Home Depot lasting longer than Best Buy, because there's really not much that Best Buy has in their arsenal for products at this point that people need or have to have that they can't, because you can go to Walmart to pick up majority of the stuff. If you want a television, other than going and touching it and feeling it, you can go to Amazon and buy them. So it's the writing's on the wall. They've just been able to manage well. And if Best Buy really pumps up their online business and shuts down some stores, I think they can have a longevity there. But they've got a crazy amount of stores in some areas. I mean, I've only got one next to me for 100 and something miles, but when I was in Houston, if you drive down Highway 6 in Houston in 1969, you will see a Best Buy about every 3 miles apart. I think I counted one day over 20 something Best Buys on that one street alone. It's freaking crazy. So they need to go in there and restructure their business, I think, for longevity purposes if they have a chance. And I think they need to start going more towards the Amazon way of doing business. And then they will, I don't say they're going out of business. I think they just need this right here is probably needs to wake them up to restructure. And they've been around a long time. They've been around, I'd say since the late 60s, mid 70s, something like that. They're an old company. They weren't called Best Buy originally, but they renamed it, I think, in the 70s or 80s or something like that. But they know how to survive. It's just that they just got all these other vendors, like the Amazons and Walmarts. They're just really, eating at their heels. And so they're going to have to restructure themselves. And I think an online presence will probably be, they already got it, but just to somehow or another stimulate it more somehow or another is what they really need to focus on. Anyone got any other tickers? Or we've just been kind of just this whole time since this whole started, we've just been constantly focusing on the market. But I mean, this is conditions for that. I like to usually talk about individual stocks and tickers when we have news to warrant it. And I'm hoping we'll get back to some normality soon, to where we can start talking about, this is the hot pick for the day. This is the hot stock, and focus on individual tickers more so than just constantly on the SPY. But right now I'm focused more on the market than anything else, just because why worry about individual stocks when, that's like saying I'm going to worry about, one ship or something when I got a fleet I'm dealing with, so it's more or less sediment of the direction of the market, and in general is the way to trade right now, more so than individual stocks. We will have some one-hit wonders out there to look at, but right now the main focus is the market itself.
Hey, Darkside, I got a question for you. So GM, I know this recent act, there was a, forcing them to, or the defense bill forcing them to make the ventilators, respirators, whatever you want to call them. Do you think that forcing of them doing that will hurt their stock, help their stock, not have an effect?
Short term, it could hurt them because people are going to remember that they were forced instead of voluntarily did it. But as time goes by, it won't have much of an effect, I think, long term.
It is kind of weird. I mean, I'm looking at their daily chart. They started dropping. They broke through kind of a support on, I guess, February 20th. But they've been gapping down and then gap up, gap down. It's kind of a weird, ugly looking chart.
Yeah, I'm not a fan of trading GM just because there's not enough range. The float's too large, so I usually just totally ignore it anytime I see news on them. It's kind of like GE. I usually just totally ignore GE's news announcements because the float's too big. I mean, they've lost about half of their shares off of the drop here. But they'll rebalance, Government will bail them out if not.
Gotcha.
I mean, just need to get rid of General Motors and change it to Government Motors.
Hey, Darkside.
Yeah.
2 questions. One, your thoughts on Teladoc? Will it keep on going higher? And also, if we are if the market is going to go down and we're going to fall into a depression, what is a good stock to hold for shorting for the long term?
I think Teledoc's got more room. Longer this lasts, the more this one's going to become popular. And I think long-term trajectories and stuff like that, I think Teledoc's going to become the new plateau, more or less, of the type of technology it's in. So I think that Teledoc will continue going for a while. I mean, the problem I see with it is you see how choppy it is. And that's the thing I'm not a big fan of, is because it's not clean like it was before. Ever since, pretty much their earnings report, we've been just back and forth all over the place. And so intraday trading, it's fine. I'm not a big fan of the swing side because I don't like the whipsawing I'm seeing inside of it. But I don't think this is the top. I think this thing will keep going for a little while, at least until we get some light at the end of the tunnel as far as this virus being closer to being over. So they probably got at least probably a continuation run until the next quarter. As far as long-term downside moves and stuff, I mean, most of the stocks have already down at levels now that are going to be hard to break through. So trying to take a longer term swing to the downside is just the easy money's already kind of done. So I would just take each stock as you see them, giving us the signs that they're breaking down, is taking those for, swings on the downside. And not necessarily just say, oh, well, I'm just, because of this financials or whatever, just automatically take it. Because you can see how some of these stocks that look they're going to go out of business, they pretty much just hit a base bottom. And it don't seem like they're going to go much further. And they'll just be slowly drug out to death. Ones I would probably look at more or less for swings would be maybe like Netflix or something. You're going to have some wild swings inside of that. And so when you start seeing, the response happening in the market, you can start taking that, because you see how Netflix has had a beautiful bounce off of its level here. And it's actually coming up to more or less a topping trend zone. So if we get a pull in the market, Netflix can pull really nicely with the rest of the market. So just look for technical setups like this. They can give you the ability on that. And we're at the stage now that if you want to play individual tickers versus playing the SPY or playing the futures, then you need to go in and get yourself a good list of charts. You can use scanning software if you want, looking for the oversold, overbought conditions. You can start looking for differences of the momentum changes, and start manually going through each individual chart and look at the patterns and see if you see patterns, and just start doing more or less pattern recognition plays off of it, because more than likely they will play out. So we're getting into more of a stabilization of the market. The fear factor of plummeting isn't as strong as it was 2 weeks ago. So we're going back to normality. You can't play fundamentals yet because the fundamentals are pretty much thrown out the window. So at this point, you can play technicals. So going across each night and going across charts one after another, go through a couple thousand charts, and look for technical setups that looks like that has the ability to make a move either the next day or coming soon. And then you can play those, and you can play those for swings, or you can play them for day trades.
So, dark side, pretty much what it's looking like is by market close on Monday, we will have a good idea at the general direction that the SPY will take. Is that correct?
Yeah, we'll have a better idea where we stand. By the market close, we'll have some more prints coming in that'll be different from the ones that we closed with, because the prints we got now that just came in at the close should be the same price points that we should see majority of tomorrow's trading day or Monday's trading day. That's what the normality is usually. But I know we haven't talked about my older classes I know what I'm talking about more or less when I'm talking about the looking at the charts. But the newer members probably don't realize it and stuff. TC2000 had a great feature inside of it, and TradingView also has this feature in it. Go into your watch list on TradingView or TC2000. The other platforms don't do this as easy. And create yourself a list here, a watch list. And you can go in here and say, like, create yourself like a go-to watch list. And then all you got to do is when you get that go-to watch list, you come up and look at your daily chart and you say, okay, do I see a pattern there? No. Hit the space bar. Do I see a pattern there? No. Hit the space bar. And you can go through a few thousand charts by just hitting that space bar off of your go-to list and stop at one that you see that looks like it has a decent pattern that you want to, that makes sense. Now, the guys in the class that can go through the pattern portion of the course aren't going to really notice as much, but just as a reminder for y'all more advanced students that this is a time to start doing that. And this is basically where I normally make my watch list in the morning, because I'm always just paying attention to more or less news and the hot topics of the day, because that's the biggest catalyst and it's going to make us the most money. This is a time and place where making your watch list at night, can be done, and don't worry about the morning one, because unless we really have some really beautiful news, most of the news that comes out is going to be kind of like a why bother anyway, because we're moving market sentiment directions. But by doing these technicals overnight and putting together a good watch list overnight of technical analysis plays, you'll be able to see, you'll have more or less the direction. Okay, this is a setup for a short. This is a setup for a long. Based upon the market direction of whatever happens in the market that day, now you know which tickers to go to on a long or short list for possibilities of playing the plays. And you've already got yourself already mapped out, ready to go, of knowing these are the stocks I need to jump to for the possible plays off of that. Now, if you don't want to go and do all that extra work, then you can just play the SPY and the futures and call it a day. Anyone else got anything? I've been going for a couple hours now.
I'm just looking forward to Monday, I guess.
That's the great thing about this job. We always are looking forward to coming to work. We really hate weekends. Sunday night's not so bad for a futures trader, but equity traders, man, we hate the weekends, because it's like, especially if you're an options trader, because you have even a tighter window. It's like, we don't want to take time off. We want to trade. But this is a great opportunity. But since, we've got ourselves a good, 30 hours or so before futures fires up, take the opportunity to start going through, create a go-to watch list. Look for stocks that that have been popular in the past, stocks that you like, have good ranges in it. You want to make sure you put the stocks on the list that has at least an ATR of, I'd say, 3 or greater. Don't go and put yourself on a list of a stock that's moving $1 or less in a move for the day, because you're basically just wasting your time. And what are you going to get out of it? 50-cent move. There's way too many stocks that have $3 plus ranges on every given day, no matter how good or bad the market is. And go and put yourself a list together of stocks that you can start going through and start doing that. And just do that on a nightly ritual until we start getting our fundamentals back in shape.
Darkside fitness equipments are being ripped off the shelves right now. Everybody's running out.
So was it Peloton? Are they doing well? Yeah. So everybody's gonna be pumped up, huh?
I've heard that too. My wife was big into the gym, but basically everyone she knows is going out and buying fitness equipment. Basically every fitness store is empty. That's why a lot of gyms around here are actually renting out their equipment that they had in the gym.
I imagine gyms are taking a big hit right now. What was the
PLTN?
Planet Fitness, isn't it? PLTN?
It's PLNT.
There we go. I imagine they're going to take a little bit of hit on their financials because, I mean, I'm honestly thinking about since that we're going on to 30 days about canceling my gym membership that I have and just re-signing back up when it's over because heck, this thing lasts another month or two. Why do I keep wanting to giving them money for nothing? You know, and I'm sure there's a lot of people are thinking about cutting costs, and gym memberships are going to be the first ones unless they're locked into some sort of contract. But this company here doesn't have contracts. They charge you, it's a monthly, and you have a annual fee you pay, which will be a discouragement for people to cancel it because if they want to come back, they'll have to pay that annual fee again. But if you're close to that annual fee anyway, or if you feel that this is going to be probably 3+ months or more, then you actually have money in your pocket by canceling and re-signing them out back later anyway. So
I know 20.
Go ahead.
Sorry.
No, go ahead.
I was going to say, I know 24-Hour Fitness, they let you do a hold option with your account for $10 a month. So that might be something that preserves some capital for them.
Yeah. I think this company may have something like that also. Yeah, some sort of suspension or hold.
But I will say, my girlfriend and my sister, they both have kids and they have gym memberships for their whole family. And they've canceled their gym memberships and are now looking at buying used gym equipment online because everybody's selling everything to get money so they can pay their rent. And so there's a ton of cheap stuff online. So they're thinking about building home gyms now.
So there could be an actual bunch of these gyms because they're needing to pay rent, selling their equipment, and now they're going to have to buy all new equipment if they want to stay open. Of course, I guess they can always take a loan out to buy new equipment.
And the one gym that stays open is going to have a hell of a discount when this is over, and you'll be able to go back for half what you're paying now.
It's true. I'm sure there's going to be a lot of fire sales and discount sales and everything else popping up on places like gyms and stuff. Just like I figured the automobile industry is probably going to go down to 0% interest again.
And then just thinking on this whole gym thing, what do you think about supplement companies? Because that's a huge, huge market for the athletic industry.
Well, I mean, if everybody's still exercising at home, I don't see why that would affect them too as much as that. But then again, they may be hyped up because they go to the gym. I don't know. I don't know enough about the industry to be able to have an honest opinion about supplemental companies.
Well, the problem with the industry behind it is that you have so many brands creating so many fitness products, but the gyms, then you don't have so many companies of them. The big ones are just a few, right? Or am I wrong?
There's probably, I would say, large nationwide companies. There's probably about a half a dozen out there. On the stock markets, Planet Fitness is the only one that comes to the top of my head, but There's the 24-hour fitness is real popular across the country. Gold's Gyms is pretty popular. There's been a lot of these gym companies that have came and gone over the last couple of decades that these companies will wind up perishing, and then the new company will wind up starting up all from scratch. So,
do you guys have Choose out there in Texas?
I never heard of that one. There used to be a Bally's or something fitness back in the day. I still seen the signs around Houston. They went out of business many years ago. That was a real big one that I saw around the country when I traveled. But they went out of business, and we'll probably see the same thing happen. I think they went out of business whenever the 2008 crisis happened. So we'll probably see the exact same thing happen with this crisis. We'll probably see, somebody like Planet Fitness will probably go belly up. Planet Fitness probably has the better chance of making it, because if you're paying $50 or $100 a month for your gym membership, you're less likely to keep it than if you're paying your gym $9 or $20 a month. Because $10, $20 a month, you're probably not paying attention to that on your bank account as much. And so they'll have a better chance of probably weathering the storm because they're used to that currency. And most people aren't going to be that tight with canceling a $10 a month bill as they would be a $50 or $100 a month bill. So I think Planet may weather the storm fine, because I think they start their prices off at $9.99 or something like that, $9.95, somewhere around that ballpark for the starting price. They'll take a hit, but I think they'll be able to make it through it. But these other gyms, they're charging high rates inside these cities. They'll be the ones that'll probably wind up belling up on it. Anyone else got any ideas or anything?
Thank you for class today, Darkside. I appreciate your time.
Yeah. Appreciate it, Hector.
Darkside, Cake, obviously you heard that they're not going to pay their April's rent. Do you foresee other restaurants like this, like Texas Roadhouse, maybe Shake Shack, doing kind of the same thing?
I don't know. Honestly, I think that's kind of a ballsy move. You may say it's just flat telling somebody you're not paying the rent. But in these type of times, I wouldn't say a public announcement of saying I'm going to pay my rent. That to me is kind of a negative PR statement. But they could go back, and I think most business owners, if they're in a business, can go back to their landlord, especially somebody as large as Cheesecake Factory is, and say, look, we're going through these times. We need to renegotiate. Because if not, you're going to have a pretty big area of square footage that's going to go vacant. And you think anybody's going to come in here and fill this spot real quick? And so those landlords are going to be more apt to renegotiate than to let them default and just walk away. And even if they put to say, we'll just forego, or, if you're paying paying for a building as a business, just like on your mortgage on your home, you can always contact the lender and talk about a forbearance of seeing if that you can get that payment put at the end of the loan, and just skip a payment basically. And it's to their advantage to do it, because one, they're helping you get back in a financial order so you can continue paying them, and two, you just added a little bit more cash at the end of the note that you got to pay a little bit more interest on. So it's a win-win for them. The only thing they have to worry about is they do this for you one time. Will you be able to honor your word and continue or not? Is the worrisome that these lenders have. But as a person that's renting a retail property like this, or just a renter in general, you really can't throw that at the end of a note because there's no note. There's a contract usually, but that's not the same as the note. So renegotiating your contract or your leases is the most prudent thing that these businesses need to be doing. And this is a perfect opportunity for them to be doing that. And anybody that's been in the business long enough knows that you can go back and renegotiate, because you're in a bad situation, but you got to understand these landlords are also in a very bad situation right now, and they cannot afford not to get money. And if they were already overcharging as it is, they got a little bit of a leeway to work with you on that. And so there'll probably be money that's another form of money that will help these companies out to save some currency on a renegotiation. At the same time, the landlord side is going to be the one that's going to be like, man, I'm not making as much money as I was. So the renegotiation will be taking place based upon whatever the time frame they negotiate on restructuring a contract. But guarantee as soon as that is over, the landlord's going to be wanting to up the rent, which is fine if they can renegotiate and kick the can down the road for, a couple of years. That'll give enough time for the business to recover for it and for them to be able to do it. But of course, the rent will eventually, they'll have to make a decision if they want to stay there or not at that time. I don't see Cheesecake Factory going out of business off of this. I think it was just negative PR that they thrown out. And I think they did a very bad way of saying that, because they should just privately went to each of their landlords and just said, look, we need to renegotiate.
Darcy, I just got one question, if you mind.
Sure.
So market conditions are really volatile, and we know that. What would you expect conditions as it is now to happen at the market on Monday when it opens?
Am I expecting more volatile market on Mondays? What you're asking?
Yeah, the moment that the ring starts, we are in business. What do you expect?
I expect market volatility every day the bell rings. That's what should happen. As far as direction, no, I wait until I see the sediment of the direction. I don't play the algorithms popping back and forth. I mean, if I got a chart that is so perfect that I'm like, okay, this is a beautiful pattern, like the ones we talk about in class, I'm just like, this is a pattern that should go based upon the technical side, that we should get a pop at the open or we should get a drop at the open, then I'll take an opening trade. By all means, I will do it. I'll take a pre-market. But if I don't have a pattern that is setting up for that conclusion on that, then I sit back and wait for the whipsawness to settle down and wait for the pattern to develop and wait for the trade to basically, as Janny would say, come to me. I wait for the trade to develop to take it. Because otherwise, if you're just going in guns blazing at the open, you are basically a 50-50 trader. I mean, you may make money, you may not make money. Just randomly firing off at something makes absolutely no logical sense, other than market order in, market order out, scalp. What is that really going to do for you? Well, it's basically, you might as well just go to Vegas and just flip the lever on the machine, because you're going to get about the same damn results.
Yeah, my question was because you mentioned that sometimes the fundamentals on this kind of market, do not play 100% of the time. You never play 100% of the time, but more in this kind of volatility. So that's what I wanted your intake. What could happen Monday, since everything is kind of out of whack, right? I mean, I know the numbers are to the point, to the T, but based on what its conditions are, so you get a better insight. So that was my question.
Yeah, I just play what I see on the charts, man. That's all it comes down to. Okay. I mean, I usually wait for opening range breaks unless I see something in pre-market that's developing that I have a stock that I'm just like, oh my gosh, I can't pass this opportunity up, then I'll take it. But majority of the time, I just wait for the ORB. because you have enough time at that point to get a good sense of direction by the time the RB should start kicking in.
Got it. Thank you.
Hey, Darkside. So on the scanner on TradingView, when you go to do your scan, there is a symbol type: common stock, depository receipt, ETF, and preferred stock. Like obviously common stock is our common regular stocks, our equity. ETFs, that would be like the SPY and things like that, correct?
ETFs are indexes. They're usually
I guess that would be
they're
the
a combination of multiple stocks, or they could be a measurement of something. I mean, if you go to the
And,
VIXs, they're a measurement of volatility.
So the VIX is an ETF as well?
ETF, ETN, yeah, depends on the metrics, how they set it up.
Okay, and then what is a preferred stock and a depository receipt?
Which ticker are we talking about?
All these ADRs, right? ADRs, American Repository Receipts. Is that the one?
So
yeah,
like if
that
you,
would be
if
one.
you, so preferred stock, is that like when an investor buys preferred shares? Because I mean, I wouldn't think that would be that.
You have a ticker to pull up?
No, well, it's like click on the screener at the bottom. It's not a ticker, it's a category. So like when you click on the screener and then go to your filters at the bottom, the little blue button, the filters on the right side, top. And basically you set your filters up for scanning. So at the very top, you'll see the exchange, and then there's usually a symbol type. Yeah, on the left side, symbol type. It says common stock. So if you do the drop down there, it has a list of, and when I first ran these, it had all of them in there except for, I think, preferred. But I just didn't know what the other ones were.
I always just leave it common stock as that catches everything.
Gotcha. Okay.
I'm not really caring about the ETFs and stuff. I mean, there's only certain ETFs I'll play, so I don't ever scan for them.
Okay.
I mean, there's playing basically the market in general, like the Qs or the SPYs, the Russell, the Dow. Play if you want volatility, you run over to the VIXs. You know, so there's certain ETFs or certain reasons that you want to trade them and stuff, but I don't. I just go to them whenever I have a reason to go to them. I don't necessarily go to them just because I see it on a scanner and stuff. Because I mean, especially when it comes to SPY, I got the SPY running on the side chart all the time, even before all this happened.
I have that one for sure.
You know, so the scanners, I just stick with the common stock because they basically cover, you know, all the stocks out there that are on side of the markets, like your NASDAQ, your NYSE, and so on and so forth.
Okay. Cool. Thanks.
Yeah. Anyone got anything else? Yeah, Moto's right there, Joshua. He's talking about the preferred stocks. It's kind of like you'll have two stocks listed. Like you have Under Armour has two stocks there for it. One's a preferred, one's not. It's based upon the voting rights.
Sweet. Thanks.
Thanks, Darsai, for your time.
Yeah. All right. Y'all guys have a great weekend. And as I say, either take this time and study or go across the charts and start looking for some setups that look good for you. going into the week because we're getting into that time frame now for those type of plays to start panning out, and just stick with the technicals at this point. Y'all guys have a great weekend. See you on
All right,
Monday.
guys. Stay
Thank
safe.
you, stay safe, guys.
Stay safe and prosper.
Yeah. Take care.